Hi friends, welcome back everyone to Angel Trading Friend. This is Prince here, your trading friend. Friends, in today's video, I am going to explain to you how you can make more money or how you can build more big portfolio when there is a market crash. How is that you should not panic? How is that we can stay relaxed? How is that all the big institutions or the big investors or big fund managers, how are they staying relaxed during this kind of particular period? How are they taking insurance for their stocks? How are they making their money more double triple during this market crashes? All those things I'm going to teach in today's particular video. So I recommend this, if not now, anytime else, this video will be very useful for you. So please do save this video into your mobile. It will be useful for you any point of time. And also please give me a commitment that at least you have to share to somebody who is in need of this kind of help, because many don't know how do you make money when a market crashes. Many don't know how do you pay, how do you take insurance for your stocks, many don't know how do you stay relaxed during this kind of crashes. So there are many outside who are in needy of this kind of advice. So I recommend you to please share at least to one or two persons of yours, your well-wishers or your friends. This would be a best gift for them. Okay, so in today's video I am going to explain to you how to take insurance for your stocks, and also I will tell you that this insurance is going to be free. You don't have to pay anything extra. Are you aware of this? Many people are not aware of this. So if for example your car insurance or bike insurance or your house insurance or anything of life insurance, in case you have to pay money for your pocket. So many people when it comes to stock, they will wonder that should I pay money from my pocket? Friends, you don't have to pay money from your pockets. You can take insurance for free as well. So that also I will be explaining in today's video. But for people, those who are novice, those who don't know anything about options, don't have to worry. You know, my teaching is going to be very simple. I will explain to you in a very simple manner how we are going to take insurance for your stocks. And by doing this, you are going to make more money when the market crashes, and also you are going to be relaxed whenever there is any market crash. So this COVID-19 is a very particular example. When market crashed from almost 12,000 level to 8,000 level, during this time there were many people, many investors who were afraid. I had my own subscribers, my own friends who were asking me on WhatsApp, sir, what to do, shall I sell it or shall I average it out, or shall I, there's one more big foolishness people are doing. What they're doing is they are averaging out their stocks, whichever they are having. What do you mean by averaging out? Say for example, the stock value is 1000, now it has come to 800, so they're buying more so that the average reduces from 1000 to 900. Again, when it comes down to 700, they're again buying more so that it gets averaged. Friends, let me tell you, this is not the 2008 crash where 2-3 companies applied for bankruptcy and then the economy started recovering. This is COVID-19. The vaccine or the medication is still not found. The deaths are the deaths are increasing day by day. So there is no guarantee that the market has touched the bottom part. So it is not the correct thing to do averaging now. If at all you want to do averaging, I recommend you to divide your funds into 5 to 6 parts and then invest only small now. Don't invest the full amount as of now, because there are chances of market going further down in case if the vaccine does not come within 1 or 2 weeks. I mean to say 1 or 2 months, or in case if the lockdown which we are facing as of now, if it continues again, you can see market will be going down. So there are many situations, many variables attached to it. So this is not the right time to invest your full amount, whatever savings you have. It might again go down. But I am going to explain to you today how to take insurance for whatever stocks you have. How is that you can stay relaxed? Okay, so 2 commitments you're giving me today. While we are going to learn this, I'm also asking you as a complimentary to please share it with your friends. It will really help them in case if they are not aware of this kind of beautiful technique. And also save it in your mobile, or please subscribe to my channel, because if not now, some other point in life you might feel this as very useful. How is that you're going to take insurance for your stock or for your investment or for your portfolio? All this we are going to learn in this particular video. So stay tuned till the end of the video. You'll be getting full updates. With the Excel sheet, I have taken an example of Nifty, because you know that I invest only in Nifty most of the time. 99% of my investment are in Nifty, and I recommend others also to invest in Nifty only because it is more stable compared to other stocks. So I will take example of Nifty, how we can take the insurance. If at all you need the Excel sheet also, you can WhatsApp me from my number. You WhatsApp on my number 8095876525 and collect it from me. And any other support, any other additional service, you can always WhatsApp on my number. Okay friends, so stay tuned till the end of the video. You'll be getting full updates. Thank you and have a nice day. So as I told, I'm going to explain about how do you save your investment during the COVID-19, or it can be any other crashes. Okay, so some people say that stock market trading is dangerous. The reason because when they see this kind of crashes, they lose almost all their capital, almost all their investment, and they stay away from the stock market. But I am saying that trading in anything without lack of knowledge is dangerous. So try to get the correct knowledge. If at all you have the correct knowledge, then nothing is dangerous. You can be safe as anything. Yeah. Now, come on, friends. The point which I was talking about was insurance. You would have seen insurance for life, you would have seen insurance for health, insurance for property, for vehicle, for injury, travel, home, accident, everything. But are you aware that we have insurance for our stocks as well, for our investments as well? I think many of you might be not aware of this, so stay tuned till end of the video. I will show you how to take this insurance and then how to make sure your money is safe. Okay. Now, you would have seen this kind of situation where whenever you apply for any insurance, okay, you will see that they say that the sum assured will be 10 lakhs. So the premium which you have to pay is 1000 etc. or whatever it is, and this will be again there will be slabs. So again for a premium for a sum assured of 20 lakhs, there will be some kind of premium. Again for 30 lakhs there will be some kind of premium. So in case if you need a much higher premium, I mean to say much higher returns, then your premiums will be very high. So what happens here is that it is very clearly understood that as the returns are increased, the premium also will increase. So you can see that initial case it was only 1489, but it went up to 14,885. In the same way for stocks also, by taking far out of the money, your premium will reduce. But if you take very close at the money, or if you take at the in the money, then your premium will increase, but the returns also will be more. Okay, so what is all this I'm talking about? I will give you full details. First I'll show you the Excel sheet. This is nothing but the Nifty. I've taken full 2020 data from 1st Jan 2020 till you can see 31st March 2020, till last month I have taken the data so that you can get a full analysis. So what exactly has happened? Say for example a person who has invested in Nifty. Okay, Nifty at 1st Jan the price is 12,202 and the high price is 12,222 and the low is 12,165 and close is 12,193. What you have to do is you have to just take a put option. You just have to buy a put option, nothing else. Now friends, what is put? I am not going to go into full detail basics of it. It is just nothing but options. In options there are call and put. So call is nothing but you're betting that the option the underlying stock will go up, and put is nothing but you're betting that the underlying stock will come down. So here in this case we are taking an insurance by thinking that in case if the insurance stock come down, then it will give us a return, it will give us very good returns. Now say for example Nifty is at 12,202. Every time in the month starting or always you can take on the end of an expiry, you can take this insurance, nothing but the put premium. You can buy the put premium immediately on the new contract which is starting. Okay, so in this particular case I'm taking as 1st Jan, but you can see in the month of Jan there is hardly any downfall. Okay, so main downfall you can see has started in the month of March. So you can see here it is where it has crashed. So I'll take example of March so that I won't waste much time explaining to you. So 27th February was the last day of the contract for February month. So on the last day I have to just see what's the spot value. So the spot value was 11,633. So I have to take insurance based on this spot value. Now if at all you would have taken futures, that is if at all you would have taken Nifty in the month of February expiry, you can see it you bought it at 11,633 and it has come down till 8,598. that is almost difference of 3,000 points. So that is what I've taken here. The difference from of 1 month is 3,000 points. Okay, I have taken the ending price minus the open price, so you can see that from 11,600 it has almost reached 8,000, almost 3,000 points the Nifty has come down. Okay, now coming to the strike price, which strike price do we have to sell? Friends, this is what I was talking about, the premiums, the premium or the investment. You can see this column I am showing the buy price. Yeah. So if the see as of now you can see the spot price is 11,633. If it is far, you can see that the premium will be less, but the returns also will be less. This is the points which you are gaining. Okay, so you can see market has crashed 3036 points, but we have gained 2426 points. This is the premium buy value and this is the premium sell value. So we bought it at 60 rupees and we are selling it at 2486. I'll show you that also how we got that. Okay, I'll just open this is the NSE website where you'll be getting all the historical data. So I have taken Nifty 50 for 2020 and the contract I have taken is March 26, that is in March month what has happened, and I have taken the put option. So I'll just show you with 11,100 what is going to be the premiums. Okay, wait a second. This we are taking at February 27, that is the end of the February contract. Yeah. Okay, so let's just wait for the data to come. Okay, so you can see on February 27 the market has the contract has expired, so that time we are taking the trade, we are taking the order. So we are buying at 60 rupees, same thing I have mentioned here. Yes, we are buying the premium at 60 rupees and nothing else we are doing. We are just leaving it till end of the next contract. So you can see it has increased, it has gone even almost 3000 levels also, and it has come and closed at 2486. That is what I have taken here. It has sold closed at 2486. So it's nothing but we are buying a put option at 60 rupees and we are closing it back at 2486. Okay, now the difference between these both is 2426 points. Now the point which I am trying to make here is, you see the strike value is very far from the spot value. You are gaining only 2426 points, so that means there is still 550 points difference. I agree, no doubt in that. Okay, but in case if you bring the strike price more closer to the spot value, you can see 11,200, the premium will be higher. You are paying 70 rupees premium, but the returns also is going to be high. You can see instead of 2,426 you got 2,515. You bring it little more closer, you get more. You bring it more closer, you get more. You see the spot value is 11,633. So in case if you're taking 11,600 is almost ATM, that is at the money, you can see that there's hardly 56 rupees which you have lost. The entire money whichever the market has crashed, you can see that 3036 points the market has crashed, but still you are gaining almost 2980 points. Okay, so whatever the market has crashed, you are getting back from the market. So this is the beauty of this premium option. So in case if you want to take in the money, you can see in the money if you take it will be 11,700. Okay, so I'm taking in 11,700, so you can see almost 3083. It has gone till 3083. If at all you want, you can check everything in this NSE India website. Will get full details. You can see here, I'll just show you 11,700 in case if you're taking and let me just get data and see. You can see it has closed at 247. I have taken same thing. Yes, so you're buying at 247 and it has reached almost 3083. Okay, 3083, same thing I've taken. So the market has crashed 3036 points, but here you can see that it has given you returns of 3083 points. Friends, so two things you have to decide here. One is the strike price, how much you can afford to invest, because this is not going to be a 1 or 2 time thing. Every time when you're having an investment, you have to keep taking your insurance, so that whenever the market crashes, you will be getting returns from the premium, from the put option. So you don't have to worry, whatever you're losing, the market is crashing, you are gaining. Okay, so this you have to take a decision which premium you want, but this is the technique which most of the big fund investors do, and this is how they keep their money very safe and hedged. Now I will tell you how is that you're going to make more money when the market crashes. What exactly you need to do is, okay, during this particular period, let us say for example you have 100 or say let us say 1000 shares with you of Nifty. Okay, so now when the market has crashed, it has crashed 3036 points, but you are getting here almost 283 points you are getting here. I have shown you a minus. So it means that 2836, one lot of Nifty is 75. So you can see that you have got a profit of 2,12,700. Yes, you agree? You got so much of profit. So with this profit, what you have to do is you have to buy again on the end of the expiry. So you can see the price has reduced now to 8,598. So with this profit which you are getting, you are reinvesting and you are buying your shares again in Nifty. So initially you had only 1,000 shares. Now this 2 lakh has come extra for you. You are not going to sell anything whatever you are having. You don't have to panic anything. Whatever you have lost, you are gaining in the put option, and the profit which you are getting in the put option, immediately you are buying more because the price of Nifty has come down. So you'll be getting more shares, and then by doing this every month, whenever the Nifty goes down, you will be adding more and more shares of Nifty into your portfolio. And once when the market turns back, when it start going up, your returns are going to be huge. Initially you had only 1,000 shares, but now every time when the market crash, you have added more and more into your portfolio. So when the market returns, you are having more units with you, so the profits will be more. This is how people make more money when the market crashes. This is how the investors make more money when the market crashes. For traders, it is completely different. You know, I am doing my live trading video in which even if the market goes up or the market goes down, we are making money. We are least bothered about the market's crashes and all those things. But for an investor, how they are making more money when the market crashes is by using this particular technique. They are doing the insurance. The money is safe, nothing to worry, and also they are keeping their investments also open. They're not closing it, and they're always waiting for the market to return. And this is how they're doing the averaging. You must not bring extra fund for doing your averaging. I agree, when the market is coming up, when it's returning back, you can start investing and making the average. But when the market is going down, this is how you have to do the averaging. Friends, hope you liked this video. Hope this knowledge was sufficient for you to take a call whether what you have to do for your investment, for your portfolio. If at all you have any doubt, you can always WhatsApp me. Yeah, and one more thing which I told you, that how can you do it for free? Friends, this is buying a put option. People, those who know more about options, what you can do is you can sell call options. And for selling call options, you don't need to have extra fund. You just have to pledge your stock. There's something called as pledging your stock. So this 1,000 shares, whatever you are having, if at all you pledge, let it be Zerodha or Upstock or anything of that sort, they will give you 90 to 80% of the fund into your trading account. With that money, you can sell call options. Many people don't allow buying of put options. That is why I'm selling. You can sell call options. Both are the same. Only thing is you need to have a little more knowledge of options, because we have to do the adjustments when the market moves up and down. So that option, if at all you want to do sell options, sell of call options, it's only for the people those who know about options. But if you are novice, if you are new, simple thing you have to do is just buy a put option, decide how much premium you have money to invest, and then accordingly select the strike value. So in case you take nearest, that is nearest to 11,633, you can see here, when you take the nearest, the difference is hardly anything. Okay, almost close to zero it is. That means whatever the market is crashing, so much you're getting from the put option. So you can see market has crashed 3,000 points, but the put also has reached 3,083 points. So it will be equal to what the market crashes, so you don't have to worry about whatever happens to the market. But yes, one thing I have to tell you, in case the market goes up, this value will become zero. This 60 will become zero, or this 247 will become zero. That means this is going to be a loss to you. It's nothing like you're paying insurance for your car. So if there's no accident for the car, the premium will be for the company, the premium company. But in case if there is an accident or something, you'll be getting the full benefit. But one thing is clear, you can be relaxed, you can be safe. Any other doubts, any other confusion, always WhatsApp me. And thank you for watching my video. If at all you are not subscribed to my channel still, please do subscribe. And as I told you, please do share it to your friends. You will be helping them in saving their investments in one point or the other. And also, in case if you need any support, any backtested files, or of any other strategies or additional services or training from me, you can always WhatsApp on my number. My number is 8095-876525. And also don't forget to join Angel Broking or Upstock, and you'll be getting 50% discount on my courses as well as my open trades. Okay friends, so thank you and have a nice day.